Hi, welcome to a market update, and we're going to be focusing on the Dow. Now, normally we'll look at the S&P, but the news media really likes the Dow for whatever reason. And just to also give you a heads up, although most people use candlesticks, will use them for either intraday or swing trading. You can also use them for longer term investments. But the reason I mention that is because for those who trade longer term, they may not only be looking at the S&P but the Dow as well. So let me show you some interesting stuff in the Dow. What we have here is the action. I'm recording this on Tuesday after the markets are closed. And this is a very notice the rally here. This is a very healthy way for the market to rally. Almost a 45-degree ascent, really not getting overextended. And what I want to show here is this line here. The green line is the RSI, Relative Strength Index, and you can do a lot of things with the RSI. One of them is looking if the market is overbought or oversold. And usually, if it's above this dotted line, 75%, some people look at 80%, the market is viewed as overbought. And I'll get to this red line in a minute. But what's nice about the action is that the market moves up. You see how it's getting overbought. And then by trading sideways, digesting the gains, the market then relieves the overbought condition. And this can go on for a long, long time. It's like a stairways progression. It's like that song Stairway to Heaven. Move up, trade sideways, move up, trade down a little bit, and then move up. Now, one of the cautions about oscillators like RSI and stochastics and things like that, and just to refresh your memory, although my niche is candlesticks since I revealed them to the Western world back in the 1980s, I've been using Western technicals since 1974. So I am just as comfortable with Western technicals. In fact, I use them to complement the candlesticks. And that's the focus of a lot of our education, is not only understanding the correct shape of the candlestick line, but much more importantly is what do you do with that candlestick line? Do you buy, do you sell, or do you stand aside? And that's what looking at candles in combination with Western technicals and trade management is all about. That's what we call a trading triad. Triad is Latin word for three. It's a three-legged approach. Candlesticks, but much more than that. Second leg is Western technicals plus candlesticks, and third leg is trade management plus candlesticks. But getting back to the RSI and oscillate, which is an oscillator, as are MACD and stochastics and so forth. Normally, oscillators should not be used in strongly trending markets because what will happen is the oscillator, whether it's RSI or any of the other oscillators, will get into overbought territory, and traders or investors will think, hey, the market's overbought, I'm going to sell it. But the problem is they'll get into overbought territory and then stay pegged in overbought territory. So oscillators work really much better when the market is not trending. How can you tell if the market's trending or not? Well, one common way is using the ADX, and that's what this red line is. And the ADX just shows us the trendiness of the market, not the trend of the market, but how strong the trend is. So for example, notice the ascending ADX line. This is showing us the uptrend is strongly entrenched. All right. Now notice the ADX is moving down. That is telling us the trend is running out of steam, so the market is now trendless. So when the ADX is trending down, or when it's below 40 or so, we could say the market is losing its trend, and that's when we can place more emphasis on the oscillators like RSI and stochastic. So here, with the ADX downward sloping and under 40%, okay, the RSI becomes more important to use. But anyway, current levels with the ADX showing us the market is not strongly trending. Okay, although the longer term trend is up, it's not a really strong uptrend. So normally, we will be focusing on the RSI because the market is not trending. So the RSI and oscillators become more important. So just a little extra education there. But getting back to the markets here, what's really nice is that notice how this old resistance area around 13,000 is holding as support. But one of the questions I was asked recently was, Steve, where would you buy if the market pulls back? And with that in mind, okay, what I'd be looking at, to me, what's major support, there's a weekly chart of the Dow, whoops, is this prior resistance area. Okay, see the highs over here, right over here, and the highs over here. So this zone between, let's round it off, 12,900, dark cloud cover over here, by the way, and over here around 12,750, bearish engulfing pattern, another bearish engulfing pattern. This zone here, this old resistance zone, once broken, should become support. And look what the market formed. Once it got closed above that level over here, it did hold that as support. So the answer to the question, where would I think about buying for a longer term investment, would be down around 12,750, and then having a stop, I would say, under the 12,000. Well, actually, the buying zone would be 12,900 to 12,750, and having a stop on a weekly basis down around 12,600. And my upside target, now we're looking at the month, there's a weekly, now we'll look at the monthly, and this is my target, 14,250. Look at the confluence of signals here. Shooting star, evening star, high wave candle. By the way, if you have forgotten any of the candlestick signals, what they look like, and so forth, we have very basic definitions on our website. You can go to our website. This is a screenshot, so it's not really sharp, but at candlecharts.com, you just go to our candlestick glossary. There's a free basic glossary, and it goes over, for example, what an evening star is and what a shooting star is. And a good way to really refresh your memory if you are familiar with candles, or if you're not, a good way to get up to basic knowledge levels and what the candle shape looks like. But as I mentioned before, knowing the candle shape really doesn't do very much, because what you do with it is really important. So, for example, here we have an evening star, the 3 candle lines, but this one I wouldn't be selling on, although it's bearish, because the market's right near a support area. Okay, down here. So lots of nuances beyond the scope, obviously, of this short video. Now let's quickly look at, for example, I just wanted to show you, here's an example of one of the candlestick glossary definitions. Once again, in the real world, it's going to be very sharp. This is a screenshot, so when you go to the website, it will be very sharp. And feel free to pass this on to any of your trading buddies or anybody you know who wants to get the right information about candlesticks. So let's look at the euro now, and just very quickly to show one of my great, or I should say one of my favorite strategies, is looking at the support or resistance area and see if a candlestick line is confirming it or not. So here, for example, we have a support zone, and notice how we have a piercing pattern, almost a bullish engulfing pattern, confirming it. And my target is these dual bearish candlestick signals, the dark cloud cover. And by the way, the high of the dark cloud cover should be resistance, and right at the level we had a bearish engulfing pattern, so essentially back-to-back bearish signals. And so it looks like we successfully tested the bottom end of a range. It looks like we may be coming back to the top end of the range. And as far as first support is concerned, see this prior resistance? On a very short-term basis, this resistance should become good support. If not, then we may be in for a retest down here of the 133. Okay, hope you found this informative, and may the candlesticks continue lighting your path to greater profits.